The market has been rising to new highs. You know why, right? Well, of course, we all do. Central banks have been printing currency like it's confetti and handing it out to corporations all over the world. A pervasive tactic never before done in history. This failure will be taught in books years from now as the worst monetary disaster ever conceived. And we're right smack in the middle of it. You came here for the truth, so let me unveil that for you. Today we are going to get into this bombshell news that I have for you. Let's look at this first. I've shown you this chart before, but I want to lead with this. It's very important. We are looking at the central banks around the world and their intentions, and that is to pull back on liquidity. It's not just one central bank or two or three. They're basically all doing this now, claiming it's time to roll this back. Now, why have the stocks risen? I've covered this 1,000 times plus. The central bank intervention, quantitative easing, has pushed the stocks up. It has not pushed up all stocks because that's not how it works. They can't have such control unless they give the money directly to that corporation, which they have done before. But using their normal quantitative easing methods, they have to basically set it free and see where it goes. It has flown into select stocks. Those stocks have been rising and rising and rising, and we can see that they're at new highs all the time. Look at this. We are seeing the central banks pull back on liquidity. And what is the timeline for this? In the next 12 months. That's right. 12 months. They're going to be pulling back potentially greater than $1 trillion US in tightening in a 12-month period. That is a very large number considering what the central bank has done in recent years. I don't know if they're going to be able to do this without causing a crisis, but that's what they're claiming. You can see there are different amounts for different central banks here, but it doesn't matter. If they actually do go ahead with it, there's no way that this can be beneficial to the stock market. Stock market has risen because of the central bank intervention, because of low interest rates. If they increase interest rates or if they decrease the quantitative easing, they pull back on the liquidity, we will have a disaster. There's no way to put this otherwise. That's the funny thing. You know, there's a lot of talk in the financial media about the Federal Reserve and how they can't make a mistake. They need to not make a mistake. And what they mean by that is we appreciate that you want to increase interest rates. We appreciate that you want to pull back on your balance sheet. But hold your horses. Don't go too fast. Take it real slow. Look at this. Okay, I have way too much information to cover today. I'll try my best to cover as most of it as I can. For anything that I don't cover that you see here, you can always go to the links in the description, check out the sources. The Bank of Japan now owns almost 80% of the entire Japanese ETF equity market. What kind of stupidity is that? And people believe in these markets. I mean, if you don't know that information, that's fine. But if you know it and you still invest, then I'm not going to judge anybody. You know where I'm going with that, right? It's crazy, truly. All right, back on it. The BOJ will likely be the major shareholder in 55 companies by the end of 2017. Bank of Japan holds 39% of Japan's government debt. That equates to 79% of Japan's GDP. It's absurd what's happening in Japan. There's no real investors in Japan. It's just the central bank. The Swiss National Bank bought $100 billion between the US and European stocks, $100 billion worth. It owns 26 million Microsoft shares. I've covered that on this channel before. I got laughed at. I got ridiculed. Proved it, shown you the SEC's website where it shows you that. People laughed at me. That's cool. Thanks. The listed stocks of the Swiss National Bank rose 120% in the last 2 months, almost 400% in 1 year. This has risen. It's unbelievable to see where it has gone. You've seen the stocks rising, but you've seen the central banks buying more shares. Does that equate? Does that correlate? Let me think about that for a second. Nope. No thoughts come into my head. USD denominated Russian bond yield trading below the Treasury yield. And I think I have a chart on that in a moment here. Argentina uses defaults as a recurrent macro-prudential policy to tackle debt overloads from time to time. 2014, 2001, 1989. Yet, this year, the country issued a 100-year bond for a 7.9% yield. Red-hot demand, oversubscribed 3.5 times. They've continuously been defaulting, going bankrupt. And then they offer this thing. They'll say, yeah, we'll give you 7.9%. Yeah. Give me your money. And it was oversubscribed 3.5 times. I just don't understand this. This is when you know that it's all a fraud. It's all fake. Leverage to buy stocks on the NYSE margin debt hit an all-time record. Told you this before. And it went up in lockstep with the S&P as both doubled since 2009. Covered that as well on the channel. Is this 2007 over again for CLOs? No way. The covenant light loans are over double what they used to be in 2007. It goes on. Look, there's a lot going on here. There's so many different reasons why this market has risen, and none of them are real. It's all central bank intervention in one way, shape, or form. The central banks, the government, they're in collusion, the big corporations, and it's all of them versus you and I. But people still have faith, people still invest, and people fund these criminals. Let's move on. Income inequality is at its peak and going further. Look at this. Debt used to maintain the standard of living. Oh yeah, that has risen. Hours of work to buy the S&P. An interesting gauge here. I believe Mike Maloney covered this previously. Look at that. Same thing. We're seeing the dot-com bubble 2.0 happening. I mean, it doesn't even have to have anything to do with the tech stocks. It's just that euphoria. It wasn't even present during the 2007-2008 crisis. This is dot-com again because it's becoming very stupid. How big a liquidity tide in 2018? This is basically the same thing that I covered earlier, but it actually tells you the descriptions here. The FOMC had committed to start cutting its balance sheet from October 2017 at a pace of $400 billion per year. Okay, it goes. I'm not going to go through them all here, but you're looking at $1 trillion or more US that's going to be pulled out of the markets. How do you think the markets are going to react? Now, surely another central bank like the Swiss National Bank could come in and fill in the void. Perhaps. Maybe they might see a discount. Stocks drop by 10%. The Swiss National Bank comes in and buys it up. That might be the case. But even more distortions will occur as a result. Doesn't really matter to me. EU junk bonds yield less than US Treasuries. All right. Looking at this here, we're seeing that convergence at this point. Junk bonds yield less than US Treasury. The junk bonds are usually designed to get more yield, but nobody wants this garbage. That's what I think is funny. There's no value in these. Central banks panicking, the first signs of market weakness. Oh, Janet, shake it for me, Yellen. You are wonderful. Look at this. There's different dates that go along here. Back in 2014, Asian stocks jump on Yellen easy money remarks. Janet, what else do you say here? Going 2015, thank you, Janet Yellen. Stocks surge after the Fed statement. 2016, stocks jump as oil prices rise, and Fed chief Janet Yellen calms investors. Mama Yellen. Here she is. World stocks soar to record high after Yellen's upbeat remarks. That's 2017 February. Stocks rise. US dollar down after Yellen signals rate rise. That is March. Nothing makes sense anymore. Australia stocks jump on Yellen's the dovish testimony, that was July 2017. Anything that they say brings these markets higher. They wait on their words. If you notice, the day before any of these meetings, a lot of times there's just like a wait and hold type of attitude, unless something is absolutely certain. They're always, okay, let's just wait until tomorrow. Volumes are lower, and you just see that. It's funny the way it works. When interest rates rose this rapidly in the past, it typically led to some stormy weather on risk assets. It's interesting. Looking at the right here, the 10-year US yield and market bubbles. Seemingly every time there's an upswing, a downswing follows it. Will we head in that direction? I don't know. I don't know that. But it just seems that way. That every time we're going up, we're following it with a down afterward. This is one indicator. There are so many. And last but not least here quickly, demise of the middle skilled jobs, change in share of employment by skill level since 1990, and globalization and income inequality. Does that surprise anybody at all? US wages and salaries as a percentage of GDPs, that's the blue line. Okay? That's you and me. Okay? Our earnings, what they actually buy, is just continuing to become worthless. More and more worthless. And every day, people around the world are telling me their stories, or people that they know stories, how they're suffering, how the conditions are getting worse. I hear it every day. Maybe you don't if you're looking at particular media, but I'm hearing this from people with their boots on the ground, feeling it in every single country. I've gotten emails from people all over the place. I've visited people in different countries, talked to them, asked them about the market conditions, asked them about the economy, and I see it with my own eyes as well. US corporate profits before taxes, guess what? It's on a rise. It's no different than what is happening with these stocks. They're being pushed up. The collusion is there. We see it every single day, and yet some still deny it. If you found this video informative, please give me a thumbs up. Hope you appreciate my little rants, my little interesting way of delivering information. If you did, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there are links that you can check out below that'll give you the opportunity to go there, flip through the books for yourself. Take care.